Good morning, everyone. This is Chrissy from Solstice ATR. Hope everybody's doing great. You can find us on the website, Twitter, Instagram, as well as on Discord. Remember, this video is only for illustration use only. We are not a broker dealer. Past performance doesn't indicate future results. And today I want to put something really clear to everyone. I'm not biased to either side of the market. The most important, if the economy has picked up and inflation is around the corner, we have to think about what the Feds can do and the wild card that can cause a reaction in the market. Let's first start by taking a look at the first illustration that I put on the combination of the instruments, and I put this: will strong economy data lead to a correction, indicating a shift in the Federal Reserve Board? What I've done here is I basically combined the four instruments: the S&P, the Nasdaq, the Russell, and the Dow Jones Industrial Average. This is the September high of the combo of the four, whether you use SPY, SPX, or the E-mini contract. Similar if we use the Nasdaq 100 or the QQQ or the NQ. Similar situation. This is the COVID vaccine high. This is the January low of the market, 4th, and the correction. Then we have the March as well correction. So the most important thing to keep an eye if there's going to be a change in the trend in the combination of the four instruments and the wild card in case the Federal Reserve Board changes their policy. Do we still be buying equities and keeping the economy strong by buying certain instruments, or do we sell some of our positions or stay neutral with doing nothing and hold on to the positions until there is a correction in the market? I hope this will be helpful, and I will as well at the same time do shift my charts and show you a couple of numbers on hypothetical due to the 1993 in July event, as well as March of 2010 events that has happened, and what the projections and the draw ups and the drawdowns are. So let's first start by taking a look at the four instruments. I do have a 1 year daily chart. As you can see, this is the September high. This is the November vaccine. This is the January, I believe, low that we had. Was that January? No, this is December. This is the January. Is it? Yes, that's a January low that we had. Then we had the March low. Then we continued higher. We're starting to get a little bit side action here for the last week or so, range bound on a couple of the candles on the daily chart. In order to continue higher, is there going to be still movement in transportation, consumer products, oil companies, productions, as well as people going back to work full-time or part-time, or they are still going to, some of them work out of their home because they got used to being on that lockdown. So let's first start by taking a look at the SPY, and I wanted to do the ETF just that way you can see, guys, how it looks like in relationship to the E-mini contract. You can see where the gaps are in the chart. At the same time, you know, the resets in it, and there's a gap here in the company. When we created a W, we pushed higher, and this is a gap that you look for. There's those two gaps here, and that's the September and November vaccination, and that's the January low and the SPY. And what I can do is go now to the slash NQ. We'll start with the Nasdaq 100. As you can see, I have all the fibs on it. So what I'm going to do, this is our annual high for the year. These are the November, this is the September and November high. What I'm going to do is go for 30 days or 90 days for our chart, so you can see where we are in relationship to how I set up the chart, my chart, weekly charts, monthly charts out that way, and the annual Fibonacci's and the extensions of them. As you can see, this is the April 1st till April 31st, the high and low for the month of April. So now we are going in May, so we don't know what the outcome is. So I set up my fibs from 0 to 100, and I do have extensions to the top and extensions to the bottom, as you can see, and this is the fib. On the weekly chart, I do go in here, and I show you guys where the weekly fibs are, and I keep them colored. That way I know where my extensions, in case I do get the drawdowns, from the weekly high and low of the week. Do we get a drawdown to the minus 23, 38, 61%, 161 to the bottom? As you can see them down here. I'll just zoom down a little bit more so you'll get to see where the Fibonacci's are, and the top from the 100 to the 161. So when we are trading, we have to make sure that we understand where our fibs are, and this is why I'm going a little bit more in detail on it. So you can see, you can create it like a little push up. Last week on Friday, we got the side action. Monday, we pushed up. Tuesday and Wednesday, we came down. We rallied up, and on Thursday, we sold off. And on Friday, we stayed inside the lower distribution range. But we are holding on the weekly 4-hour chart, the 1 to 16 SMA. Above us is the 50 simple moving average, which is the yellow, and the 18 is red and green. So the most important thing, do we change in trend and go back up? Or do we have a crab pattern? This is an eye here, which is you can consider this is a head. This is another double top. We got this shoulder here. We retested that area. Do we continue, or do we fall back down to the backside of the channels and the fib extension on the Nasdaq 100? Let's now take a look at the small cap RTY, which is the wild card out of the canary in the coal mine. So as you can see, the fib of April is the low here and the high here. We retested the 38.2. We are holding the 50 simple moving average on the daily. As you can see, we're going to zoom in on the Fibonacci's as well to make sure we understand. We tried, to side action. Then eventually on Thursday, we sold off on Friday, but we are holding the 50 SMA and the 116. If the wild card and we end up losing last week's candle that push high and Friday's low of the week, which is of April 30th, we look to go further down to the 61.8 and eventually the backside of this major candle that took us higher. If the Fibonacci's and we do U-turn and go back up, we trade what we see on the charts, not what we think. And at the same time, I do have that RS1. It says that's resistance, that's support. That's my 0 and 100 fib. And my F3 is my 38, my F5 is the 50, and my F6 is the 61.8, in case you guys want to watch my videos and understand how they are in relationship to where we are in the trading. This is why when I compress it and I go faster time frame, the auto fibs automatically go on. I don't have to look for them, and I know where my monthly fib is and where my weekly fib is in relationship to where we are. So I don't have to do my smaller fibs for the daily charts when we are trading the short time frame. Let's take a look now at the YM. The Dow, as you can see, has been, range bound for the last 3 weeks. It tried to break up. It looked up, came back in, looked up, came back in, tried to look up. We are in a down wedge. We know what the monthly fibs are. Remember, you go from 1st to April 31st, where the highs and low, and you anchor them. Similar situation here on the weekly. We are below the 50 and the 18 on the 4-hour, but the 116 SMA is holding us up. We do have the 200 lower. If we can clear the other side of the fib and clear this wedge, we continue higher. If we fall, or we fall through the Thursday low, we look for the wedge on the back side of the channel and the Fibonacci's, which are the extensions to the downside. I hope this was helpful in the Dow. Let's take a look at the ES mini contract. We did the SPY just to show you how it looks like. So you can see where the monthly fib high and low are. We'll zoom in on the last 2 weeks range so you guys can get a better feel. We have been range bound. We created a W. We pushed up. We looked above. We came back, retested the consolidation of 1, 2, 3, 4, 5, 6 days, and the bottoms of this. If we cannot hold here and we cannot hold the 50 SMA, I look for the 116 simple moving average, at the same time the fib extensions to the downside. As you can see, the machine took 2 weeks range and anchored the low and high for the fib, not like I did the high and low. Because remember, machines do look at the Fibonacci's differently on a long time frame and a short time frame, and they move themselves together. But as a human, I anchor mine on weekly basis where the highs and lows are compared to the monthly, and the machine anchors them a little bit differently sometimes because they look at where the supply is and where the demands are. So most important, we have to hold the 50. If we don't, and we lose this low on the weekly bar, this consolidation of the last 5-day range, we'll look for the backside of the 161 and eventually the extension of the 38 monthly fib down here to see if we can continue back up, or if we break above the 18 SMA and the 4188, then we continue higher. I am not bearish, but I do trade what I see in front of me. I'm not biased to either side. We trade what the charts give us. So I hope this was helpful. You can see, I mean, it says a little bit bearish because the last 2 days have been downtrending, but the short term down, midterm and long term are still up. So remember to be not biased. Let's take a look at BTC. Similar situation. BTC has filled the prior gaps. I had them anchored here. We looked up, we came back down, and we fell all the way below the 49,496. Right near my main line in the sand for the Fibonacci is the 51,000 some change. Let's call it 51,300. This is the line in the sand for the bulls to hold in BTC. If they do lose this one, or they lose the 38.2, which is the 53,700, I would watch my fingers in BTC because this was the prior lookup, come back, retest, create a higher high. This is the consolidation, and I have a major line going across. This is my ADX DMI. This will find resistance because it hit the 200 SMA on the weekly and the 116. If it cannot clear it, it will U-turn. It created like a shoulder. This is the head of it. This is the other cup, which is the other shoulder. You can create like a rounded bottom, higher low. This is the handle of it. If it cannot continue higher, it will fall back to the backside of this channel in order to hold. If it does not hold, watch your 38, 50, and 61. It would reset lower. I'm not biased to any side. This has a major gap from the prior look above, fall down. This is another gap in the overnight, but this is the major one that's major visible in the trading hour, non-trading hours, and the trading hours. The overnight non-trading hours is the gray area. The trading hours in the US markets is the black area that you see highlighted in the charts. Let's now take a look at ETH. I'll just go over it a little bit fast because everybody's now trying to go into crypto, Coinbase, and all that stuff. This is Ethereum. As you can see, it created a nice W. I don't have here to mark the gaps or any of that. I have a white box here. This is a very important number, 2,450. That range has to hold. We have the monthly fib. It has the weekly highs and low. If I zoom in this area, you can see where the weekly high, it just kind of grinded up its way higher. I would be careful of the 18 SMA because you are far away from the 50 simple moving average and F3, which is the 38.2 on ETH. Let's take a look at GC. Gold. Gold has been a little bit the wild card in case the Federal Reserve Board does want to change the outlook in gold, because we were in a linear down channel. We have an up channel. You notice I've anchored those two, high and low. We do have a midpoint here. If I anchor it, we're still below it. We have not been able to clear the 1792, 1796 in the Fibonacci. We tried to look up. We're kind of grinding lower. You can see there's a linear regression channel that I drew. In the last 2 weeks range, gold has not been able to break out. So remember, if we can hold 1760 or 1754, we're going to be fine. If gold doesn't hold it, we'd look for further coming back to the 1700 where the consolidation was before the breakout to buy gold. If gold does eventually break the 50 simple and the 61.8, the 1780, 1782, 1790, then continue higher, would look for the upside of 1796. So we're going to trade gold on daily basis according to the range unless it gets a breakout or breakdown. So far, it is in a symmetrical triangle, range bound in a down slope at the same time in an uptrend, but has not been able to clear the 1792 to continue higher. Let's take a look at CL. And we can see in CL, crude has been, range bound, looked up on the monthly last week. That last push was very great in oil. Then eventually we fell back down in range. That was I believe this was the annual high. You can see 1/8/2020 to 4/21/20. That was the low of $6.50. Remember when the barrel went to zero? So this is what the charts give us on TD Ameritrade or Thinkorswim on their platform. Some other platforms show you a zero, a barrel. So I'm using just Thinkorswim, the micro, not the micro, the lightweight crude oil. We can see we pushed up, we came back down, we created a rounded top, but it didn't create a shoulder here where it's supposed to have done it. It kind of created a tiny one and continued straight up. We came back retesting the consolidation of the prior. This was acting as resistance. We fell through, came back, looked above, and we came back to that area. If this area doesn't hold $63 or $62.50, we're going to have a problem in crude oil. May fall back inside that consolidation here before we make anything. But if it's going to continue, I do not like to see gold below crude below 63.20 in order to continue higher, or the Fibonacci, or the 116 SMA and the 200 to catch it to continue higher. If it falls, if it U-turns and goes back above the 64.30 and continues higher, that would be better for oil, which has a target of 68 in the future. So that's crude. Let's take a look at IEF. I'm going to start with the bond market. This is the short-term 10-year, 7-year notes in the market. If interest rates are going to stay a little bit under pressure around, minus 1.5 the 10-year, the 20-year notes, we can see that there's going to be a little bit, on the pressure side for the banks to make money unless interest rates go higher. And since the Federal Reserve Board are, keep buying out, equities and keep buying stuff to keep money flow going around to help us out. So we are in an up move. You can see we pushed up, we came back down, and they started to price back the bond to the upside. We got to keep an eye on the ETF fund or the ZB or the ZN. If I go like here on the TLT, which I'll show you, TLT or TBT, TLT. And I started with the bond market. You can see I'm going to switch it because this one doesn't have any fibs. I know we came out of a breakout of a wedge. I'm going to go just to the daily chart 1 year. You can see that the high and low where the bond market, the TLT fell back down, the 20-year note, or the ZN or the ZB, the 30-year note. You can see it's trying to pick itself back up in a wedge. It has to hold here in order to continue to keep interest rates a little bit lower. If interest rates are going to keep grinding higher, this will fall further down. So that's something that you have to keep an eye on. Or you can use a fan to see where the fibs are. And I'll use the IEF to show it to you. IEF to show you how you can do it. You can grab that high here to this low here, and you can see how the fan works from the beginning of the year till end of the year. I can show you how to do a fan or a fib. We can do that rounded fan. We grab this high here. We end because these were the ones that fell down. These are the gaps. Come on, click it. We go down to here. You can see this is very wide. If I start where the breakdown was, we're trying to come back in that circular range. We retested the 61.8. This is the 0, the 23. That's a 0, 23, 38, 50, 61. We retested it and fell back in it. If I just take this monthly fib, we'll take these off. This will help you to see where the ranges are removed drawing. A lot of people use fans. A lot of people use Fibonacci or time sequence in fibs. As you can see, we created that W. We looked up. We're coming back to retest that consolidation. This has to hold in order for the bond market to continue back to the 116. And I do like to see that small gap that we retested here and that one here going back up to keep interest rates a little bit lower. Unless the Fed changes their policy. Let's go now. Take a look at AAPL. We can see Apple, we got too many days here. We're going to go to the daily. We're going to go to a 90-day 4-hour chart. You can see where we are in relationship where the fibs are on the monthly. We have looked up and the Apple fell back in. That was the earning report. Looked great, did well, but eventually it fell down. It got sold into strength. There may be a shift in the tech sector to another one. That's Apple. Let's take a look at Amazon. Amazon did very well and they sold some of it into strength. You can see that as well in April. That was the annual high here. This is my annual high. If I put my mouse, you can see it's from March 16th till September 2nd, 2020. We retested this high. We looked above it, and that 35.52.55 was actually shortable, looking up and falling back in, and they sold into strength. The fib, the 38.50.61, has to hold Amazon to continue higher. If it doesn't hold the 50 simple moving average, you'll look for the 116 and a 200. That's Amazon. Let's take a look at GOOG. I'm just going to go over a couple of them. I'll do Boeing as well. GOOG did the same thing, but it looked up, but it stayed a little bit stronger. Remember the consolidation before here? I said it'll break up. It did the same thing in April. It consolidated for a while. It was range bound, holding. The earning pushed it up. It came back halfway through this candle. This is very important, the 61.8 in this channel. If it's going to lose it, you look for the 50, then eventually the consolidation of 22.75. I'm not being bearish or biased. I'm just giving you where the scenarios are and the 116. If Google going to hold and this U-turns and goes back up, you look for 100% of this move up here to the upside where the extensions are on the top. So if I zoom in here and we'll look up, you can see where the extensions are to the upside where the 61.8 is. If it does not hold and it falls through there, we look for the extension to the other side, which is the 161 opposite side of this candle to the opposite side of the range. This was where the major consolidation was. This has a lot of volume and built here. If it holds here, that means this strength in the stock is going to hold it up. Let's take a look at NFLX. Netflix was a little bit more weaker on the earning report. It looked up and eventually fell down. It couldn't hold. It's in the consolidation range with the prior consolidation here and here. If Netflix gonna hold, and if it does and it's gonna look good, it's gonna fill 100% of this earning gap down, which is your 50 fib here, your 61, and eventually the 161 where it fell from the consolidation of that W pattern. The breakup, retest, break up, fall back on earning, it will come back to the range where it fell from, and that would match the 161, and the consolidation is this breakdown before the look up and fall back down. That's what I'd like to see in Netflix. If Netflix cannot hold, you look for the backside of the 0 line. Let's take a look at Tesla. Tesla, I think, is going to have a little bit more problem. I don't like where it is in the situation because it's in a, if I draw a channel from here to here, it's in a down slope. Let's just go get a channel so everybody can see how I anchor my channels and fibs. You grab this high here to this high here. Where either one, you can see it's downtrending. And if I grab it to the top, it'll show you this was the candle. This is our down channel. And if I do the bottom one from the bottom, we can anchor the bottom and top. We grab this low here. We are in a symmetrical triangle. You can see it. It's testing here. We can do this one like that, or we can just, wick it and go to that one here. So you can guys see where the channels are. We are in that triangle, but you can see that the Fibonacci is on the monthly fib high and low. We are retesting the 50% fib. We are holding the 38. If it cannot clear the 61.8 of that major consolidation for the last 2 weeks and falls back in, I would look for the backside of the breakout of these candle here, which would be the retest of the 619 area, 610. And if it breaks out, you look for the other side of the 770 area. Let's go look at BA, Boeing. As we can see in Boeing, we fell back in. And Boeing is in a down channel as well. We're going to keep an eye on this down channel if it's going to break up or break down out of this channel in order to get a reversal back up. Because if this is the shoulder and created a shoulder and this is the baseline, 332, 333, and it's going to hold, it's going to look back to the upside of the 1850 and 116. If it doesn't, then it falls further back down. And let's do a couple of ETFs, XL. Okay, this is the tech sector. You can see I have the monthly fib on it. Keep an eye on the tech because it's been range bound for the last 2 weeks. XLV, this is the healthcare sector. You can see it looked up, coming back down on the monthly, has to hold here. If not, it'll come back to the prior consolidation of the 117, 118 area. Let's take a look at the XLF. This is the financial sector. We can see on the monthly fib, we looked up and we got to keep an eye on this area here, the $35.50 to $36 to hold. If not, you look for the backside of the channel. Let's do SCH Vanguard, and I'll do the NYA. Large cap, where is it? Large cap growth. I'll do just a large cap growth. You can see in the large cap growth, we are continuing higher. We had looked at the 101. If we do fall, we have to hold this area, the 97 area. That would be a great area to buy back Schwab ETF. And let's do last but not least, another equities. This is Visa. You can see Visa has looked up, grinded higher. I did the monthly and the weekly fib. You can see that the monthly, April 1st till April 30th, that's the high. If you can see it, the 29th, then we fell back in on Friday. It's going to hold this linear regression channel. If it doesn't, we look at the 50 simple moving average and eventually the consolidation of the prior breakout here. If it doesn't hold here, you look for the backside of the 161 or the 116, which will catch up with it before this consolidation breakup, come back, retest it, and go back up in Visa. We'll do one more LMT. I don't think I anchored my fibs on it, but you can see this was the March fib. What I'll do, we'll do it together here so you guys can see me how I do this. I'll go back to the ES, show you two more fibs, remove drawing. And with the monthly fib, we just activate it, move it to the high. You can see where the weekly was. That was the high. And this was the prior week Lockheed Martin fib. We're just going to re-anchor it, remove drawing. We know the weekly fib is a little different, so we'll just re-anchor it where it was Fridays. So this was the weekly. We're re-anchoring so you guys can see him activate. We activate it, we move it. This is basically a good way to basically learn how to do your charting on weekly basis. We'll put it right here so that way you guys can see it. So we're going to go to April 1st. We're going to grab our fib. This is my fib. Where's April 1st? We're going to look down here. This is March 19, 25. This is my 31st. This is April 1st. You can see it. We anchor the fib from high to low. We go back, reactivate it to make the color different. Edit property. We'll go in here. We make it purple. And this is our monthly Fibonacci for April. Then the weekly, what we do, we grab the weekly. We look at the high and low from Sunday through Friday. My weekly high and low is here. And if it's good, this is my low. And this is my high for the week. They are very similar. And this is my weekly fib for the high and low. Actually, Lockheed Martin, in order to hold, has to hold the 61.8 on the annual chart and the monthly to continue higher than the 18 SMA 116 to continue higher and break out of the 50 simple moving average to go back to the 38, then the 61.8 fib to the other side. This is why I used it. At least you guys know how I anchor now my fibs. Let's go back to ES. And we're going to remember, we're going to trade what we see on the chart. We are not biased to either side. And it's very important that you do understand things can change in a heartbeat on daily basis. Remember, the short term, 1 day, 2 day doesn't make a change in trend. You have to make sure that the trend changes in 3 to 5, 10 days. Then you start to see a change in trend. And as you can see on the short time frame, we were bearish, but on the long time frame, midterm and long term, we are up. But the short term is in a downtrend, holding the 50 simple moving daily average. Let's go back to my last two slides and I'll call it a day. Let's just go back to the slides. We're going to minimize Thinkorswim. We're going to maximize this chart. And from here, we're going to go to the next slide. What I did, I put the SPX, I put the September high, the COVID-19 high, which was the vaccination, the January low, which is this candle here. This is the March low. And what I did, I've anchored the probabilities. This was the March 10th, 2010, March 4th, the 50-day drawdown and 70-day, the highs and lows. And where did they end up at, the SPX, in relationship to the push higher coming back? And of 1983, 76 push higher, then the 288 days downtrend of 15%. This is taking a look at the hypothetical. If the S&P 500, according to March 3rd, which is April 30th, 2021, if we have a hypothetical push high, this is our numbers, the 42, 44. We looked at 42, 18, 75. We're about 30 points, above, so I marked it here. And if I take a look at the drawdown, 35, 65, 35, 65. Did I anchor the purple one? Yeah, I anchored it right here. That's the drawdown. If I'm going to use the 1993 July 26 hypothetical rate of change and the push higher and the lower in relationship, 76, that's our expected push up to the upside, and the drawdown would be down here. So I want you, if we take a look at the average, we can get 4106, which we are above, and the drawdown at 3481, average between the two consolidation of hypothetical range. So I just marked the 33.99. That means we're going to lose the September high, the COVID-19, in the January and March. This is going to be very critical area, this consolidation here before the breakout. If we end up getting a major drawdown back in the market, we will be still bearish in order to continue higher, but I want you to understand we're going to trade what we see. Last but not least, remember this slide, I've been using it for a while. We got to remain open mind to change. We're going to trade what's given to us on the charts. And remember, I did not go over the VIX in this video, and I did not go over the dollar other than gold and CL, Bitcoin. We did a couple of ETF, we did a couple of equities. So we're going to trade what we see, not what we think. And remember, be open mind to change in the market. So I hope this was helpful. I look forward to seeing you on Discord. Take care. Over and out.